Today, we're going to discuss the top 9 real estate investment strategies that are perfect for those just starting out. So, if you're eager to jump into the world of real estate investing, stay tuned. Before we dive into the strategies, let's quickly touch on why real estate is such a great investment option, especially for beginners. Real estate provides numerous benefits, including potential cash flow, long-term appreciation, tax advantages, and the ability to leverage other people's money. It's a tangible asset that can generate passive income and build wealth over time. Kindly hit the like button and subscribe to our channel. Now let's go all in. Number 1. Rental properties. Rental properties provide beginners with an opportunity to generate regular cash flow while building equity over time. When selecting a rental property, it's essential to consider factors such as location, property condition, and market demand. Conducting thorough market research will help you determine the rental rates in the area and assess the potential profitability of the investment. Additionally, calculating expenses such as mortgage payments, property taxes, insurance, and maintenance costs is vital to ensuring that the rental income covers these expenses and leaves room for profit. Screening potential tenants rigorously is crucial to avoiding troublesome tenants and minimizing the risk of late payments or property damage. By implementing these strategies, rental properties can be a fantastic choice for beginners seeking long-term wealth building through real estate investment. Number 2. House hacking. House hacking is a brilliant way for beginners to enter the world of real estate investing while reaping the benefits of reduced housing expenses. By living in one unit and renting out the others, you can offset or even eliminate your own mortgage payment. This strategy not only provides you with a place to live, but also generates rental income that can be used to cover other expenses or reinvest in the property. House hacking allows you to leverage the rental income from the additional units to build equity and potentially expand your real estate portfolio in the future. It's important to carefully analyze the property's cash flow potential and ensure that the rental income covers the mortgage, maintenance, and other expenses associated with the property. With proper planning and management, house hacking can be a powerful strategy for beginners to build wealth through real estate. Number 3. Real estate investment trusts, also known as REITs. REITs is an excellent strategy for beginners who want to diversify their real estate portfolio without the responsibilities of property ownership and management. REITs are publicly traded companies that own and operate various income-generating properties. By investing in REITs, you can gain access to a diversified portfolio of real estate assets, including residential, commercial, and industrial properties. One of the significant advantages of investing in REITs is their high liquidity. Unlike physical properties, which can take time and effort to sell, REITs shares can be easily bought or sold on major stock exchanges. Additionally, REITs are required to distribute a significant portion of their taxable income to shareholders in the form of dividends, making them an attractive option for income-focused investors. However, it's important to thoroughly research and evaluate the specific REITs before investing. Consider factors such as the quality and location of the properties in the REIT's portfolio, the track record of the management team, and the overall financial health of the company. By investing in REITs, beginners can participate in the real estate market and potentially benefit from income and capital appreciation while enjoying the convenience of a publicly traded investment. Number 4. Fix and flip. Fix and flip is a dynamic real estate investment strategy that can yield substantial profits for beginners willing to take on a more hands-on approach. This strategy involves identifying distressed properties, often through foreclosure auctions or direct negotiations, and purchasing them at a discounted price. The key to success lies in the ability to accurately assess the property's renovation needs and estimate the after-repair value. Conducting thorough market research and understanding local trends and buyer preferences is crucial to ensuring that the renovated property will attract potential buyers and fetch a higher price. Once the property is acquired, it's essential to manage the renovation process efficiently, controlling costs while ensuring high-quality workmanship. Time management is also critical, as a longer renovation period can increase carrying costs and potentially eat into profits. Finally, the property is listed and marketed for sale, taking advantage of effective real estate marketing strategies to attract potential buyers. While fix and flip can be a lucrative strategy, it's important to note that it carries high risks compared to other investment strategies. Unexpected costs, delays, or changes in the market can impact profitability. Therefore, beginners interested in fix and flip should thoroughly educate themselves, consult with experienced professionals, and carefully analyze the potential risks and rewards before embarking on their first project. Number 5. Real estate crowdfunding. Real estate crowdfunding has emerged as a popular investment strategy for beginners looking to participate in real estate projects with a smaller capital investment. This strategy offers access to a wide range of real estate opportunities that may have been traditionally reserved for larger investors or institutions. Through online platforms, individuals can browse and select projects based on their preferences, such as property type, location, and investment duration. One of the significant advantages of real estate crowdfunding is the ability to diversify investments across multiple properties or projects, reducing the risk associated with putting all your funds into a single property. It also provides a level of convenience, as investors can review project details, financials, and progress updates all in one place. However, it's crucial to conduct thorough due diligence before investing in real estate crowdfunding. Evaluate the track record and reputation of the crowdfunding platform, review the project's financial projections and risk factors, and consider the experience and credibility of the project sponsors. Additionally, pay attention to the terms and conditions of the investment, including fees, potential returns, and exit strategies. Real estate crowdfunding can be a viable option for beginners seeking to diversify their investment portfolio and gain exposure to real estate. By carefully selecting projects and platforms, investors can participate in real estate ventures with potentially high returns than traditional investment avenues, while mitigating some of the risks associated with individual property ownership. Number 6. Vacation rentals. Vacation rentals offer a unique opportunity for real estate investors to capitalize on the growing popularity of short-term rentals. By purchasing a property in a desirable location and listing it on platforms like Airbnb, you can attract travelers and generate substantial rental income, especially during peak seasons. However, it's crucial to stay informed about local regulations governing vacation rentals. Some cities or homeowners associations may have specific restrictions or licensing requirements that you need to comply with. Additionally, effective property management is essential for maintaining the property, handling bookings, and ensuring a positive guest experience. Properly managing vacation rentals can be demanding, but with careful planning and attention to detail, it can be a lucrative real estate investment strategy. Number 7. Real estate partnerships. By teaming up with other investors, you can combine your resources, knowledge, and skills to take on real estate ventures that may have been difficult to tackle alone. Partnering allows you to leverage each other's expertise, whether it's in property acquisition, financing, property management, or market analysis. Moreover, spreading the risk among multiple partners can provide a sense of security and help minimize potential losses. However, it's crucial to establish clear communication and have a well-defined partnership agreement that outlines roles, responsibilities, and profit-sharing arrangements. Building strong relationships and collaborating with like-minded individuals can significantly enhance your real estate investment journey. Number 8. Lease options. Lease options offer a flexible real estate investment strategy that allows investors to control a property without immediate ownership. With a lease option, an investor leases a property from the owner and obtains the right to purchase it at a predetermined price within a specified time frame, usually several years. This strategy is particularly advantageous when dealing with properties that have the potential for appreciation. By locking in the purchase price up front, Investors can benefit from any future increase in property value. Lease options provide the flexibility to test the property's potential, make improvements, or secure financing before committing to full ownership. However, it's important to thoroughly understand the terms and conditions of the lease option agreement to ensure a successful and mutually beneficial transaction. Number 9. Real estate wholesaling. Real estate wholesaling is an active investment strategy that allows investors to profit from finding and assigning off-market properties. Wholesalers aim to secure properties under contract at a discounted price by negotiating with motivated or distressed sellers. Once the property is under contract, the wholesaler then assigns the contract to another investor for a fee, who will ultimately take over the purchase and renovation process. Successful wholesaling requires exceptional negotiation skills, a deep network of investors, and the ability to identify properties with the potential for a substantial profit margin. It's important for wholesalers to conduct thorough due diligence to ensure the property's viability and accurately estimate its market value. With the right skills and connections, real estate wholesaling can be a lucrative strategy for beginners looking to generate quick profits without significant capital or long-term commitments. And there you have it, the top 9 real estate investment strategies for beginners. Remember, before you begin investing, do your due diligence, seek advice from professionals, and carefully consider your financial goals and risk tolerance. That's all for today's video. We hope you find these strategies helpful and inspiring. If you did, please give this video a thumbs up and subscribe to our channel for more valuable content.